Hello and welcome to your daily market briefing. It looks like a rocky start for European markets this Friday, as a wave of uncertainty seems to be sweeping across the globe, shaking investor confidence. Early indicators show that futures for London's FTSE 100 are pointing to a 0.5% drop at the open. Similarly, France's CAC 40 futures are also down by about 0.4%, and Switzerland's SMI index futures have lost around 0.8%. Interestingly, Germany's DAX seems to be bucking the trend, with futures indicating a slight uptick of 0.2%. So, what's driving this cautious mood? A big part of the story is coming from China. Fresh data released for October paints a concerning picture of its economic slowdown. We're seeing a contraction in fixed asset investment for the first 10 months of the year. This is a critical metric because it includes the country's massive real estate sector, which has been under intense scrutiny. Alongside this, retail sales have softened, and industrial output growth has also lost some of its steam. These figures from the world's second-largest economy are sending ripples through global markets, as investors weigh the potential impact on international trade and demand. The nervousness in Europe is also a spillover from a rough session on Wall Street yesterday. U.S. markets saw significant losses, particularly in the tech sector. The Nasdaq Composite, which is packed with big tech names, tumbled by 2.3% by the end of the day. The main culprits? Growing worries about whether the valuations of some artificial intelligence stocks have gotten too high, creating a potential bubble. There's a debate raging about whether the AI hype has outpaced the actual profits, and that's making investors jittery. Adding to the unease is the ongoing will they, won't they saga with the U.S. Federal Reserve. Just a few weeks ago, the market was almost certain we'd see an interest rate cut in December. But recent comments from Fed officials have poured cold water on that optimism. They've been striking a more cautious tone, hinting that the fight against inflation isn't over and that it might be too soon to start cutting rates. As a result, the market's expectations have shifted dramatically. As of this morning, traders are pricing in just over a 50% chance of a quarter-point cut in December. To put that in perspective, a month ago, the probability was a whopping 95%. This repricing is a major factor, as the prospect of higher for longer interest rates tends to put a damper on stock market sentiment. Back here in Europe, the corporate earnings season is still in full swing, giving us a clearer picture of how individual companies are navigating this complex economic environment. One of the big names reporting today is the German insurance giant Allianz, and they've brought some good news to the table. Allianz announced that it achieved record results in the first 9 months of the year. Their third-quarter performance was particularly strong, with operating profit jumping by nearly 13% to 4.4 billion euros. The company credited its property casualty division as a major driver of this growth. Based on these impressive results, Allianz is now projecting a full-year operating profit of at least 17 billion euros, which is at the upper end of its own forecast. It's a solid performance and a bright spot amidst the broader market gloom. Looking back across the Atlantic, U.S. stock futures are relatively flat this morning. It seems like the market is taking a moment to catch its breath. After yesterday's significant sell-off, investors are likely waiting for more cues before making their next big move and checking in on the Asian markets overnight. The sentiment was largely negative. Stocks across the region fell as investors reacted to the sell-off on Wall Street and digested that weak economic data coming out of China, the Nikkei in Japan, the Hang Seng in Hong Kong, and other major indices all felt the pressure. So, to recap, we have a mix of factors at play. Concerns about an AI bubble, a slowing Chinese economy, and uncertainty about the Fed's next move are all weighing on investor minds. This is leading to a risk-off mood in Europe, even as strong corporate earnings from companies like Allianz provide some positive counter-pressure. It's a classic tug-of-war between macroeconomic fears and microeconomic strength. We'll be watching closely to see how these dynamics unfold as the trading day gets underway. Thanks for tuning in, and make sure to subscribe for more market updates.